Hi everyone. Today let's talk about the economic calendar, then we'll go over max pain for tomorrow, then we'll go over these brutal charts, and then we'll talk about how they brutalized my accounts. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So initial jobless claims today and continuing jobless claims both came in worse than expected. You can see 211,000 initial jobless claims compared to the 195K expected, which normally in a bad market would be bad. But in today's market, it actually propped up the markets a little bit because bad news is good news right now. Because people think if the unemployment rate starts to go up, maybe the Fed will start to cool off in terms of raising rates. And generally, when unemployment starts to go up, that means that businesses and people are not spending nearly as much, which should help calm inflation as well. And in case you forgot, tomorrow we do have hourly earnings expected to be at 3%. Hourly earnings year over year, 4.7%. This is affecting that wage price spiral that people are so concerned about. And then, of course, we have the big one, non-farm payrolls here expected to be 205,000. It's basically expected to be around the same as what we expected last time. And we got 517,000 last time, so super hot jobs report last time. But like I said before, the unemployment numbers from today were actually a little bit worse than expectations. And maybe the non-farm payrolls come in a little bit better than expected. And when I say better, I mean bad news is good news. Maybe we see the unemployment rate start to tick up a little bit. That would be interesting. And maybe that gives markets just a little bit of room to the upside after the brutal sell-off here today. Moving over to max pain here, you can see max pain for tomorrow still sitting at 400. Highest put strike 395, highest call strike 405. My guess is that we're going to finish above 305. I would be pretty surprised if we closed below 305 tomorrow here on the SPY. Put call ratio still sitting fairly high, but not as high as it has been at 1.8. And you can see current market price sitting down around 392. So that would give us about 1% of upside from current prices. 400 still being that center point for max pain. You can see lots of calls here at 400, probably not going to finish above 400. But I could certainly see a 397, 398 finish, pretty much splitting the gaps here. That way a few puts make a little bit of money. All these calls here don't make any money. That would be interesting. And same here, 405, highly unlikely to finish above 405. And really, I think 400 is probably the limit to the upside in my opinion. Of course, it would be very crazy if we finished somewhere around 401, 402. That would be interesting as well. But that is a long way from here, about 10 points of upside. So keep that in mind. Probably going to see a little bit of a push higher, but not too much higher. Moving over to the SPY here on the daily chart. When we have such wide-ranging bars, I find the higher time frames to be the most relevant here. And you can see huge red bar here today after the slight green bar that we had yesterday. We broke through this longer-term support level, so that's very bearish. We're retesting the 200 SMA as well as the 144 EMA here. We did close below them, but that doesn't mean that they're broken. You can certainly get a candle above tomorrow. If it does hold, that would be interesting. Certainly could look for a retest of this trend line up around 399. Momentum, daily step down, not good. RSI, step down, not good at all. And then we have this longer term downtrend that we were watching for all of last year here. You can see it highlighted. And that's what we came into pretty much at the end of the session, right at that 390 level. You can see low of day here was at 390.50, and that's just a few cents off of where I have this trend line. And obviously that could be in a few different places for different people. 390.50 is very close to what I have, and it probably touched it on most people's charts. So looking to see whether this level is going to hold tomorrow. If it does hold, that could be bullish. We would like to see a break back into this channel, a break back above this previous high. That would also be very bullish. But if this level breaks down here tomorrow, then we're looking at 378 as your next low, back in this previous consolidation zone. That would be very, very bearish. Moving over to the NASDAQ here, surprisingly holding up a little bit better. You can see we're not past the 200 SMA on the daily chart. We do have the 55 EMA down here as well. And then the 144 EMA is basically right on top of the 55, sitting down here at 287.37, right on top of this lower trend line down here. Keep that level in mind. But in terms of the long-term downtrend, that's actually quite a bit below for the NASDAQ. That's sitting down at 285, so just a few points lower to retest that trend line. Lots of areas where you could potentially find some support in here. I do think the 200 SMA is going to be a big level. But otherwise, similar thesis here on the MACD and RSI. Pretty bearish. You're seeing a pickup in volume here too as well. That's definitely not what you would want to see if you are bullish. That large volume on the down candle generally means that this is going to continue tomorrow down to that 287 level. I will say that the levels that I called out yesterday were pretty much perfect. Unfortunately, I did not trade well, and I should have been pretty profitable today based on my analysis from yesterday, but it just didn't work out that way today. Moving over to the Russell here on the daily chart as well as the Dow. You can see the Russell had a big red day, kind of like I thought was going to happen. I talked about yesterday potentially getting a better entry here on the Russell today, which we definitely did do. I didn't wait until we got all the way down here, but I did wait throughout most of the day. We'll talk about that position as we get into my positions for tomorrow. But you can see we're sitting right at the 200-day moving average. That average is sitting at 181.46. We finished just a few cents below that here. Looking at the Dow, similarly, we broke below these previous lows. We're below 144 and 200 SMA here. Looks very bearish. Taking out that midpoint looks very weak. And zooming out here, you can see there's probably not going to be very much support until we get down to this 218. That's probably where I would see the next bounce. You can see there's a couple of reactions at this level going back between that 218 and 219 level. So about 4 points of downside potential here. Again, MACD, RSI on both charts look very bearish going into tomorrow's session. And then for downside potential here on the Russell, we do have a pretty strong trend line sitting down at 278.60, 278.80 back in this previous zone. And that'll be interesting to see if we do get that low and if we do find a bounce and push back up to that 187 level. That would be pretty interesting. Moving over to Apple and Tesla here on the daily chart. Apple continues to be pretty resilient, to be honest. We do have the 9 EMA sitting down at 149.60. That's probably going to be a decent level of support. There's also some volume behind that level. We also have the 200 SMA and 144 sitting at 147.40. So a couple of levels of strong support here, some decent price action and volume below current prices. We're also sitting on that longer term trend line that we've been watching. Certainly could bounce from here. That would be interesting. But Apple continuing to hold very strong, especially compared to the rest of the market. Moving over to Tesla, pretty much the opposite of the case here. You can see we threw a wick to the upside after gapping lower, filled the gap and sold off pretty much throughout the session. Looks very, very weak. At this point, you have to be looking at the 55-day EMA. That's sitting down at 162.69 here right now. Might slope up a little bit tomorrow, maybe 163, 163.50. If we do come back into that zone, that's going to correlate with these previous lows going back to January 31st. Probably a decent level where we would find a little bit of a bounce after this waterfall sell-off. Otherwise, Tesla looking very weak here today, and you should expect that to continue into tomorrow's session. Moving over to transports here on the daily chart, tag some resistance and then moved much lower, getting very close to retesting the 55-day moving average. Momentum stepping down, RSI stepping down as well, looks bearish on both indicators. We are just above the 55 EMA though, which is interesting. That's currently sitting at 228.85. That ends up being a little bit of support and we get a nice little bounce. That would be interesting. If that does break down though, you do have to look at this area of higher volume, 226. That would be interesting back at these previous lows. And then you have the 200 SMA and the 144 EMA sitting down here at 223.50, just above these major trend lines. At this point, with how strong this move was here today, I would expect that we're at least going to get down and retest these longer term moving averages, if not the trend line. Maybe not tomorrow, maybe not next week, but at some point I would expect to get back into this zone. And then we have to see if this breaks on transports. That would be very weak. Right now, we do have SPY breaking down, NASDAQ holding up fairly strong, and the Dow breaking down, but transports have been actually pretty strong throughout this year. And if they don't find a bottom here pretty soon, that could be very weak for markets going forward. Moving over to consumer staples and consumer discretionary, similar thesis. Both of them sold off quite a bit. Looks like staples held up a little bit better. Tagged the lows from Wednesday the 1st and Thursday the 2nd, pretty much staying within that range. We also have long-term support sitting down here at 70.80, going back to this previous support level. So far, this area seems to be holding fairly well. If we do come down and tag that, that would be interesting. But moving over to discretionary, pretty much as you would expect, this is a very weak pattern, looks very bearish. All of the EMAs here and SMAs are to the upside now on the daily chart, so this looks very weak, pretty much falling off a cliff here. Zooming out to get a little bit better profile, you can see this 139, 140 level was a strong level of volume. If this does break down here, you can see just how little volume there is here recently. And then you really wouldn't be looking for a decent support level until you get back into this 128, 129 level. So probably some support here at these previous lows at 135. But just look how low that volume is until you get all the way down to 128. So keep an eye on this one. Discretionary looks weak. It's been one of the weakest sectors here, and it is once again looking like one of the weaker sectors going into tomorrow and next week. Moving over to semiconductors here on the daily chart. Did pretty much exactly what we thought it was going to do. Threw a big wick to the upside, took out this previous high, and then sold off really strong. Almost engulfed the entire previous candle, looking at 239.60, 239.50 as the area of highest volume here. Looking to come into that zone and retest tomorrow. If you do break down from that level, then you're looking at these previous lows and the trend line somewhere around 233. You do have a couple of levels of support below that here. Semiconductors have been quite strong. But right now, after today's candle, you do have to expect a little bit more bearish price action coming over the next few days or so. Moving over to yields, surprisingly, yields were not the culprit here today. Yields fell pretty much off a cliff back into this previous zone. 2-year yield getting down to 4.87, continues to sell off here after hours. Probably could get down to 4.85, 4.83 back in these previous lows. That would be interesting. Similarly, here on the 10-year, we're sitting at the lows. Does look like it could roll over. Bearish momentum. Looking at probably 3.87 as a potential area where the 10-year could find a bounce. Lots of bearish momentum. 10-year bearish momentum, but not quite oversold yet. Did just barely touch oversold conditions yesterday. And then we're retesting that same level, actually a slightly higher RSI reading, which is interesting. Slight divergence there. Either way, momentum is still very weak going into the end of day. Moving over to the dollar just for a moment here, not much to add. Continued the sell-off from yesterday, found some support at the trend line through a couple of wicks here you can see on the 4-hour. Continues to chop around between these support and resistance lines just like we thought that it might. Overall trend is still bullish. Short-term trend is still bearish. Not much to add here on the dollar. MACD looking like it's ready to turn up a little bit here tomorrow. Similarly on the hourly RSI. But 4-hour RSI still says that we might just get a little bit of a retrace and a break back down. That would be interesting. And momentum is still bearish here on the 4-hour MACD as well. Moving over to JNK here, you can see we were in this trend for a while, and that has broken down here. So we have a slight bear flag here, and that has now broken down well. We're looking to take out that low here from Tuesday, February 21st. If that does break, then we have to start looking at these lows going back to 88.60 on Wednesday, December 28th from last year. That would be very interesting. Overall, though, everything looks bearish here. We broke that trend line like we talked about. Had a candle break, threw a wick to the upside, and then sold off throughout the session. JNK looks very weak here. Momentum stepping into bearish territory. RSI stepping into bearish territory. Volume moving higher here. Pretty much everything you would not want to see if you are bullish on the markets. JNK looking quite weak going into tomorrow's session. Moving over to TLT here on the 4-hour and the daily chart. Once again, continues to consolidate within the zone. We got bullish momentum here on the daily chart, bullish momentum on the 4-hour. Both RSIs look pretty bullish. Volume is stepping up as well. So everything here still says that TLT has found a base and is looking to turn up here. In terms of price targets in the short term, probably 104 is that level that you would want to look for. Lots of gaps through this move down, so it could certainly go higher. This trend line out here, you can see decent resistance up around 105 as well. So about $2 of upside fairly easily in my opinion. Another dollar, not too difficult. And then above that, you have 106.50 to 107, and then the 200-day moving average. If you do come into that zone and get a retest and you can hold up there, maybe you start to break through after that second retest. Talked about this first test, and usually that first test does fail, which it did do. So now we're coming back in to see that second retest, and if it breaks from there, that's certainly a possibility where we see TLT start to move a little bit higher over the coming months. Moving over to the VIX here on the daily chart, as you would expect, we got a huge green bar here today. Broke that previous resistance, came back up to that next resistance, broke that, and now we're sitting at that third resistance that we talked about. Still didn't touch that 144 EMA or the 200 SMA here on the daily. So certainly look for those for price targets for tomorrow, 2360, 24, 24.25. Back in this previous zone here. Certainly could find rejection in there. Maybe you come back down, retest this trend line, and get a continuation back up to 2860, 2880 back in this next zone. That would be interesting. But you do have to see this big green bar here on the VIX. Does look very powerful. Momentum, very green. RSI, very bullish. Everything looks like we're going higher here on the VIX. Last time we did have a bar in similar size here going back to September 13th. You can see we did come into resistance and then chop around here for a while, but pretty soon after we were making new highs all the way up to that 35 level, so keep an eye on that. Not quite as strong as this day going back to Friday, 22 April from last year as well. That was very, very powerful. You can see usually when we get these strong bars, there's continuation to be had, so keep an eye on that for tomorrow and the next week. Non-farm payrolls could be a pretty strong catalyst. But wouldn't it be pretty sneaky if non-farm payrolls came back a little bit weak, saw this kind of tank back down, and we see markets kind of recover? That would be interesting. But right now you have to play it the way it looks, and it looks very bullish for tomorrow's session. Moving over to my accounts, unfortunately, my thesis for yesterday was pretty much correct, but I traded it absolutely terribly. So you can see on my IWM, I did actually pick up a put pretty late in the session, all the way down at 181. So I did avoid most of the losses here for a 40-cent credit. So I'm looking to buy the IWM down at 180.60. So a little bit less than $1 lower from current prices. And that was after a $5 drop here today. So was able to avoid quite a bit of losses here in my Roth position. So that's somewhat acceptable. Otherwise, looking at my individual account, QQQ was down over $5 here, so almost 2%. I didn't lose 2%, so I feel moderately okay, but I absolutely should have traded much, much better today. My thesis from yesterday was almost spot on. I just traded it incredibly poorly. Definitely going to review my rules and make sure that I'm staying disciplined over the next few days here. Otherwise, in terms of positions, I did pick up a couple of puts for tomorrow, which is interesting, down at 287.50 for 77 cents. So trying to buy the stock at 287 tomorrow. That gives me quite a bit of room to the downside before I lose any money. You can see it's about $5, $5.50 lower than where we are right now after a $5 drop to get into the stock. That would be a pretty substantial drop over 2 days. Certainly could happen. Non-farm payrolls could certainly make that happen. But I do feel okay buying the stock down at that price. And then I can roll these out and roll them down over time until we get a nice little bullish day and they can expire worthless. That is generally my plan here with these puts. If I can't continue to roll them, maybe I'll accept those shares and start selling covered calls here in this account. But we'll see how it all plays out tomorrow. Non-farm payrolls could shift the balance and we'll see what happens. Otherwise, looking to reestablish my positions going into the rest of the month. Let me know in the comment section how you did on this very difficult trading day. And if there's any charts you would like me to go over or like me to look into, definitely let me know about those as well. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. I make this video every single day that the markets are open, as well as Sundays, so don't miss any of those episodes. Otherwise, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading, and have a great day.